Hong Kong. Darius, despite Citi securing a government bailout, financials got hammered today. Why is that?
It's true. The bailout of Citigroup is good only for this particular company, but does not change the game for financials overall or for the overall downward spiral for the global economy into a severe recession. Therefore, we saw across-the-board declines in Asia today. And one key point here is that while the U.S. market has probably already bottomed out, recovery in Asia will be delayed in line with the more extended period of recession in our region.
Let's stick with Citi for a while. It's one of the biggest banks in the U.S. It has operations in, about 100 countries. And we're looking at its market value dwindling from $270 billion to $20 billion. Is Citi too big to fail?
It definitely is, because the U.S. government has committed to rescuing any systemically important financial institution, and definitely Citibank is at the top of that league. It will be probably very expensive for the government to meet this pledge, and the guarantees for the hundreds of billions of dollars of potentially toxic assets that they extended to Citi today may cost the U.S. taxpayer dearly, but that's preferable to a collapse of an institution that could pull down the whole market with it.
Now, Darius, earlier you said that U.S. markets have begun to bottom. Markets have priced in all the bad news. How about Asia? Will Asia recover as quickly as the U.S.?
I don't think so. Usually, recovery of the stock market occurs 4 to 5 months before the end of the recession. We are projecting the U.S. will emerge from recession in the second quarter already, especially given the very ambitious fiscal stimulus package by President-elect Obama. But in terms of Asia, the recovery will be delayed by at least 1 quarter to the third quarter of next year. And therefore, it will still take several months for Asian equity indices to bottom out. And I think that Japan, for instance, the biggest by market cap here, will not recover until it reaches 700 points for topics.
Despite the fact that Asian fundamentals are solid, are in place?
I wouldn't say that the fundamentals here are solid because we are so dependent on exports to the US and Europe and on fixed asset investments supporting those exports. Those two areas of the economy are going to see very poor performance in the second half of this year and next year because demand for our exports are faltering. So I think at least half of the region's economies will see overall contraction of their GDP next year, the biggest being Singapore by about 3%, Hong Kong and Thailand around 2%, as well as Japan by around 1 percentage point.
What do you make of all the pump priming? China, for instance, has come up with a $600 billion stimulus package.
That's true, and therefore China will remain the key engine of growth in the region. It seems that policymakers there are the most ambitious and aggressive in stimulating their economy through fiscal stimulus packages. In terms of percentage of GDP, China definitely is by far leading here, which will probably allow their economy to slow only to somewhere between 6 and 7% in terms of GDP growth next year.
Darius, just quickly before we let you go, Thailand came out with GDP data today which fell short of estimates. Will that be a reflection of the rest of Asia?
What's happening in Thailand right now, it's still pretty solid compared to what we are expecting next year. All Asian economies are going to slow. Almost all will go into a recession, but we need to wait for the fourth quarter when the full impact of slowdown of global demand for our exports manifests itself.
All right, Dariusz Kowalczyk, thank you so much for joining us today. Well, up next on Asia Business.